Hello guys, welcome to the Train Parrot and to another episode of the Sunday Alpha Special. This is finally the time for you to sit down, hold your beer on top of your knee, get your wife out of the way or your husband, tell them that you have a headache, go sit down in the toilet and take a big shit while watching the episode. No one is gonna notice. In today's episode, we have tons of things that we need to look at. After all, we have an all-time high, at least against the bleeding dollar. We are facing critical weekly resistance, and I'm about to say that Bitcoin is going to do something that has never done. Just one more week in this direction, and we break all records. I'll keep you updated with all the signals, and remember that every single thing that this stupid video is gonna keep you sitting in the toilet for about 40 minutes is written down below in the description. Yes, there is timestamps, so you can cut all the crap and go straight into what you care about. We're gonna put a magnifier glass and see how these degens are taking their positions, how similar it is to previous pumps that we have, what is completely changed, and how close we are getting for a decent pullback. Or maybe not just decent, but maybe just any pullback. I know that many of you are happily holding your swing trade, and now every 15 minutes you're gonna put down the phone because you don't know whether to take profits or carry on higher, where to put your stop loss to protect your gains, or if you are in a short, where to add, all the usual. So get comfy, grab a piece of paper to take notes, not the rolling one, but let's go. Let's leave that for later. And if you like this type of videos, this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Do not go anywhere without hitting the like and writing down a comment down below. Otherwise, instead of putting alpha, I'm gonna start putting beta. And for God's sakes, wash your hands after you finish watching this video, please. Guys, if you're planning to take a trade this weekend, make sure that you have a decent exchange. Open an account on Bybit. This exchange was created by the same founders of Bybit, but the main difference is that this one is available everywhere without needing KYC. Of course, if you're addicted to KYC, you can just do it. It's optional. You can open an account across the whole world and get $50 for free, unless you're some sort of narco, and then you trigger all the security alerts. 1,000 trading pairs, leverage, and 30,000 bonuses is what you can get with the link in the description for 2bit. And yet, Bitcoin put a new all-time high, and you can see that attention to Bitcoin remains in the lows. Altcoins are taking all the spotlight. That continues to be the trend. Later in the video, I'm gonna fully cover all the progress that we have done with the USDT dominance. I'll share a new way of understanding the timing that we are, particularly of interest if you are now holding a new long and you are in the positive. It is very healthy to know where is the next ceiling. I've got a few signals triggering that I wanna share with you. Remember, that might be in the next 30 minutes in this video. So watch out for those timestamps. Here we have the Trading Parrot saying that the bull market is just getting started. Yay! We just happened to capitulate to 118K, and now we can finally start moving up. We haven't been moving up the last 3 years. We've been just going down, really, right? At least that's what I'm reading every time I go to Twitter. The bull market is just getting started. Just watch the trend line and find the moon and all these guys that are geniuses just realizing that the bull market started yesterday. They're all printing new charts showing cup and handles, showing that Bitcoin is gonna go to $5 million tomorrow, that is gonna take over the gold market cap, that the global liquidity points at Bitcoin at 300K yesterday. For those of you that are falling into that trap, I got this number, 79%. If you didn't go to school, this is a percentage. So out of 100%, we are 79% out of all the important indicators done. But we are going to challenge this as well, okay? There are no certainties in trading, in investing. So despite the fact that this has been a really great combination across all these cycles, 1, 2, and 3, ended with almost 100 in the reading of this aggregated indicator, they also started from the very lows of 7, 5, or 4, and now we are sitting at 79. We need to leave some room for this to be wrong. After all, this cycle is really weird. And we are gonna look at the elephant in the room, because if Bitcoin breaks out outside the bearish divergence channel, which we already started on the 4th of March in 2024, just like we did in January in 2021, and we exit from here to the top, that is gonna break a record. There is no single cycle where this late in the cycle, we exit that channel, we completely challenge it, and we kind of start a new channel to the upside. This late, it could happen, right? Anything is possible. Whether it's likely or not, that's a different question. And I post this picture and I was told that I was a boomer, or well, that is disappointed. Maybe it wasn't about me. But I say Bitcoin didn't put an all-time high last week. That was just the dollar that has been overextended to the downside. And we're gonna look at the general markets just a little bit later in the video. But we all know that the dollar has gone from momentum 72 into momentum 28. And we are in a falling wedge that is bullish, that has broken out, but has not yet gone anywhere. It keeps putting lows, but we remain at the same level of support in the momentum, indicating that after 3 failed breakouts to the upside, this one might push us into a revenge rally, potentially putting some stress on the move up. Just a data point, don't yet throw me anything in the face. I've got also some data points that are very bullish. If you think this video is all about me forecasting where Bitcoin is gonna go, whether I know it's gonna go up or down, I have no fucking clue. And yes, on Sundays, you can enjoy the fact that the video is gonna come without filters. I'm already shadow banned. Let's just get this shit done. And yeah, it is a fact that against other coins that are doing slightly better than the dollar, like GBP or Euro, we are still just ranging, still trying to complete the inverse head and shoulders with the target to over 150k. It is still in a bullish state, bouncing off the bull market support band with a bullish cross, all of that, but it's still looking like ranging. So watch out for that. Just another data point that yes, I agree that's been loads of activity, ETF inflows, lots of bullish things, but that is also in the context of a little bit of additional extra help coming from the dollar going down. How much of that is the dollar going down? How much of that is the bullishness? Well, I will say somewhere around the 50-50. And there are plenty of bullish news coming in. That's always the case when you have such an uptrend. Just notice that none of these news are really attracting retail so far. Retail is not that it doesn't care, it's just that they cannot afford to care because they are completely wrecked with the inflation and everything. And also many of them are entering the space via the ETF, moving things around, maybe selling some stocks and flipping it to Bitcoin and stuff like that. We can see that the current rally primarily is pushed by this. You can see on Bitcoin spot ETFs, we have 2 days of 1,000 per day. That is really mental, and is putting back this in an absolute exponential move up. And that's also the case now for Ethereum. Contrarian to previous months, now we are seeing Ethereum accelerating in terms of inflows as well. We had 383 in 1 day, and on Friday 200. You can see the acceleration in here is pretty similar to the one that we have around November. And that is something that we are also gonna cover once we get into Bitcoin dominance, USDT dominance charts. And today I'm also going to cover Ethereum dominance, which is giving us strong hints. If you care anything about altcoins or positions, that is a must watch as well. Consider it like a separate video. If you want to just go straight into that, that's totally fine by me. Bitcoin retail interest almost nowhere to be found as BTC taps the highs. I cannot disagree with this. I know search on Bitcoin on Google Trends is very low and the actual blockchain doesn't move that much. We are actually in the middle of a capitulation from the point of view of hash rate as well, and new wallets and activity in the network. All of that is looking pretty much like a bear market. And that is partially because of those economical aspects that really sucks for retail. But on the other hand, those retail that can afford to get in, they're finding the convenience of the ETF a lot better to invest. I even think that many of them must have thought, I'm just gonna, get rid of this self-custody wallet, cold storage and all that crap. I'm going to end up forgetting the password or losing it in my yacht and then just go by depositing, investing, putting it in the ETF. After all, it simplifies everything, even from the point of view of accounting, taxing, and all of that. Last week, we saw as well the Federal Reserve increase in the balance sheet, and this makes me a little bit speculate whether they are being forced to do this or if this is a genuine decision they took, because this is bullish. Although we have to move the channel slightly lower in terms of slope, this could potentially cancel out a channel to the downside, which would have been bearish. I'm still in the lookout. We are kind of in the median at the moment. If we put a breakout in here and we continue the channel up, that's definitely going to end up confirming that we were in a bullish momentum move. But if we put a new low in here, I'm gonna lean towards the theory that we are going in the channel down with these two red bars in there. Whatever the Federal Reserve is doing with their balance sheet is mimicked by a lot of investors. So if they unload into the market some of their assets, well, the rest of the people also see that and think, oh, something must be burning and we also need to decrease, reduce, or the opposite if they add. Let's go to aggregated open interest, because this is the first thing that is breaking records in here. First of all, this is a really bullish pattern for the open interest. What the hell is going on in here? Is this an inverse head and shoulders pointing to 60 billion open interest? Well, if that play out, that will be incredibly bullish. And it is actually in the past 2 days kind of breaking out in here, right? We have a neckline right there. And open interest doing something like this will put a new figure of 53 billion, way beyond my previous target of just 45 billion. And I'm not claiming I've been right on this, because I've been saying that this breakdown in here and this is just a revenge rally. And this week I got it wrong. We went way beyond the point of just a revenge rally that should have stopped at 37 billion, but now we are sitting at 39.1, an all-time high in open interest, and something to watch out once we get into a bear market. If we look at the previous bear market that started from 69k and ended at 15k, you can see that the all-time high in the previous cycle of open interest was barely 17.5 billion, and that retraced into the bottom of the bear market 65%. Okay, it ended up bottoming at $6 billion in aggregated open interest once everybody was completely wrecked from 17 to 6. So keep that figure. If this was to retrace 65%, that will put the open interest around $13 billion and at a price that corresponds more or less with the bottoming of 49k. And I've seen some people saying that maybe this bear market we're gonna end up at 48k. But anyways, today is all about banana sun. So let's continue talking about where we can go with the price. Where are the levels of pullbacks? Let's look into liquidation levels. Let's do forensic analysis on the bid versus ask and all of those goodies. There will be time to talk about bear market bottoms and all of that. For now, this is looking extremely banana sun if you want. I mean banana zone, but I like to say it however I want. So yeah, we are in a time in the market where we could go just mentally crazy, but you have to lock in some of those profits with a trailing stop loss somewhere, because we are in an area of 39 billion aggregated open interest. This thing, if it fails, if some shit hits the fan, the move down can be really quick, and you're gonna thank me to lock in at some level a profit that is still in the green. Okay, July is in the positive. We are almost at 10% in green. August tends to have some red. I say this in previous videos in the week, but this is the Sunday special. So for the usual Joe that doesn't have any time, just keep that in mind. Also remember that monthly returns this cycle have been all upside down. Like we did really great in this September and we were expecting red, but we came from a red month, so that helped things to shift. In this case, 4 months in the green, I will say that we have a fair amount of likelihood to get some pullback in August or in between where we are into August. It could be upside down. We could end up July in the red and then August big in the green. And then everybody gets super pissed with not getting a red August. Personally, I will take it as either July or August needs to be some in the red, but that's just my own opinion and it's not necessarily based on any statistics or anything. On CME, we close at a premium of 118.140. But that is in Binance 118, let's say between 117,700 and 118, and the price is around that level. So if it forms a CME gap, it's going to be taken very quickly unless something changes during Sunday. If we have a big pump on Sunday, let's say before the close, we go into 120 and we liquidate the remaining part that we have in this area in here of the short-term pools that span all the way to 122. Then that's going to be leaving a decent gap to the downside, let's say a gap that goes all this way, and we also have already a gap in here. That will increase the count of gaps that we currently have 5, that will increase it to 6. We recently have 7 and we went back to 5. We just formed this one from Thursday to Friday. That is a 2K gap. So if we continue pumping over the weekend and we produce another 2+K gap, that increases significantly the chances that we go for at least one of them. I am already in a short. My average entry is roughly 114, a little bit higher than that, maybe 114,500. That is thanks to me entering around 118 with a second position that I share with my Patreon community. And the reason I added so early because I wanted to hold back myself until 125 for my second order. But since we put a 2K CME gap in here, and there is fat, heavy fair value gaps below the price, even if we just take one of them, I'm already in profits and I can lock in that profit and run away with some profits from my short and then look for another long. But it is an additional risk because we can go into 125 and not yet hit any of the CME gaps, forcing me to add again at 125, and then we can go to 130. Yeah, trading is risky. Absolutely, I admit that. If you missed my videos this week, this is how it's looking the Bitcoin status. You're welcome to pause the video. You're not allowed to go anywhere and stop watching this video, by the way. Well, unless you want to get wrecked next week. On the 4 hour, we reached the top of the channel. On the daily, that breakout took a few bullets, but it managed to get pretty extended. We still don't get on the daily to the top of the range, which is 85. We're going to have a look at where is that price located. If you don't want to get out of your long on the top of the range of the 4 hour, we can still climb higher on the daily. The weekly is looking for a really juicy close, and the monthly, we are still halfway in the month, so we need to see how we're gonna finish July. Right, let's look at the 4 hour. We are starting to get overextended on the 4 hour. That is not a lie. We reached the top of the range at 85 instead of stopping at 84, which was my expectation for the top of the momentum. If we were to put another high and hit this line again, we can hit it at even 84 again, and that can bring the price into 123.4. We are about to close this candle in 1 hour and 37 minutes and potentially producing the first time that we break down local support. We have another local support in here sitting at 55.58. The one that we are challenging now is 70. Okay, so a breakdown below 70. We could, of course, break out again and go into 83. If we pinch this one and we settle it as a breakdown, we have slightly higher chances that we continue into 55 or into 49. If we break that 49, of course, we are fully resetting. Do we need to worry about a full reset? Let's say we go very low in here. Not necessarily. We can claim the benefit of having reached so high in the RSI. Remember that rule? If you've been watching the channel, we know that rule. The rule says if the RSI gets very overextended, over 80 to 90, something like that, and you do a reset of the RSI, you are producing bearish divergences with the price still going higher in here, right? Does that stop the price from continuing up? No, because it's claiming the benefit of the bullish reset. That is a condition where we can see plenty of bearish divergences, but they only help to cool down the momentum, as you can see, that goes from 85 to them 36 with the price still going up, okay? And that is something that we could do in here. We could reset to 50 and the price could still continue creeping up into 120, 122 with bullish absorption. So if you're tempted to enter in a short, watch out with that risk. I'm not saying do not short. I'm already in a short and I'm already underwater. But understand that not because you see the bearish divergences in here, or the RSI even breaking down, necessarily price must break down and lose it all. Still, let's find out the levels of support in here. If we get to those levels of 55 or 49.56, those are located at 116 and 114.9. Still, if we get there, I'm still not in profit. I need really a breakdown of 49 to potentially get into this level of 32. Where is this 32 coming from? Because it's not anywhere in the RSI. And it's not that I'm making up that number, I'm just showing you the previous breakout that we have from October in 2024, where we finally reached 83.92, right before reaching 90. That was the top of the momentum out of the megaphone pattern. And we are around 83, right? We reached 84. That 83, which could be equivalent timing in this momentum up. Let me remove so many stupid signals. So we could be at this point, right? We could be at 73 because that corresponds with the RSI of 83. And if we were there and we retrace on the momentum to 32 price, that's a correction of almost 9%. But right after that, you get the most impulsive move, which is 61% in one go. That brings in that 90, that final cherry on the cake of the momentum on the 4 hour. So here we are at 83. Let's say we go to 32. That 32 will kiss 110K. That in this case is roughly a 7%, not a 10%. But with that correction, you know, the last time in October, we entered the most impulsive move that kind of took out all the late longs that are entering in here. And similarly at 73 in October 2024, back down and then push up into a double top. Let's go to the CPR. We are currently witnessing a battle to take the second level of resistance at 117 to potentially go into 124.7. That is the top of the range of the CPR for the month of July. We can go beyond this level, but that is something that we do less than 1% in the whole cycle, even within the bull market. But I wouldn't rule it out, to be fully honest. Let's go to the daily, and we have a very similar situation. We have the 1, 2, 3, 4, and a potential 5th wave into the top of the descending channel of momentum. That's the typical behavior in a bull rally. Getting there will get us into RSI 85, which is currently priced at 131.379. We also have the breakout on the daily out of this double bottom in here. That is pointing to a target of 121.4. We are starting to roll over. There seems to be some sort of resistance at 118 that is keeping the price from moving, but I will say that is to do with the low volume of the weekend. And also there are some orders I'm gonna show you in the order book at 120 that are getting pretty heavy. There's 100 million around there. We'll look into that. Let's quickly look at support and resistance on the daily. Of course, the 85 I already covered it. That's 130. The line of most bullish support at the moment is 66. Let's remember that during the week we had a breakdown in here. We already took one bullet and we still rally. We managed to dodge the bullet because I say that breakdown, I didn't trust it. This was my video on Monday 7 and we still went up. Then we corrected this thanks to the fake out, and now we have that support sitting at somewhere in here. Let's say between 66. I'm gonna go for 65, 64.7. So we got that first line of defense, which is 115.5. If we just close the daily always above that, which is a moving target, then we secure the most bullish flag and continuation to upside. That's how we can complete the over 120 move in a very short term. We can still do it if we pinch it and we fake out again. But when you start faking out too many times in a row, you eventually give up and you start coming back down. If we fail to hold that 64.7, that 115 point something, then we have a next support sitting somewhere at 42. I'm assuming that it's going to take that long, but it could be between 41 and 42. So let's say it's fast. Then that next support is located currently at 104.1. If we get into that green line, I'm already in profit or slightly in a small profit. I really need not just this breakdown now, but the breakdown of the green and to hit the bottom of the channel at around 25. Of course, I don't need to go that low. I just need to go to the point of control or in here to, actually my average is 114. So I'm just talking bollocks. I really need just to break down below 64. And as soon as we are in 112, I'm already in a decent profit. which I can defend with a stop loss, and then see where we go from there. On the weekly, this is looking really fantastic. Either this green candle resembles this one in here, or already this large one in there, but we still have kind of pretty low volume for the weekly. We're about to finish the week. We took the most liquidity ever, and I don't see it in the volume, and that is really weird. Most of the liquidity pools were located in this breakout around this candle in here, this big green candle, and we started seeing volume breaking out from the descending sloping trend line applied to the volume, and we saw it breaking out above the moving average. None of those things are currently happening in here for some reason. So that is a data point to keep an eye. We could see it in the next move up, and then we can put a checkbox, but for as long as we don't have it, it should be something that should cause you some itchiness at the very least. RSI is about to put a new higher high, getting very close to 70 on the weekly, and also getting very close to the first resistance here at 72. My next resistance is 77, and in the price that is 121, 122, and the second one is 136. The monthly is looking fantastic, a fourth month in the green, but even the monthly is showing a very sharp decline in the volume, the lowest volume that we've seen in the whole cycle and in previous cycles. This past 3 months is just really awkward. We got the leverage squeeze signals now triggering multiple days in a row in this area in here. I suspect that it's gonna behave either like this one or like this one. We already have 2 consecutive signals. The first one just gave a move down of less than 2%. This one has moved down again just 1%, and at some point the average of the signals is eventually gonna put the overall combined position in a profit if it follows previous performance in the cycle. The hash ribbons has opened the mouth once again, almost the widest it's been, so still no news of that bull buy signal coming from this on-chain data. Looking at the net taker volume, we can see that it's spiking into 67. It's getting very similar to previous rallies that we see in here. And that means that aggressive buyers are buying into the market with market opens, not with limit orders. This is the area of chasing the price, entering at any price just to follow the trend. It is getting more similar to this area in here where we made it again into a new all-time high. Notice that the exit from the megaphone pattern, we didn't have that much of buy takers, net takers dominating. There was still selling in all the way up in here. Something else that is different is that we are still not in spot dominant rally. Each and every rally that took us into a new range, for example, this one takes us into 73, this one takes us into 105, and then we range, have been all dominated by spot. At least the early beginning of the rally, and then the topping area is heavily spot dominant. This one in here, futures, is the heaviest one. And every time you hear futures, open interest going very high, you need to think that that means that is dominated by speculation. And speculation eventually takes profits. They are not there really for a long ride. For example, in the previous cycle, this was dominated by spot. This rally in here put a new all-time high, sure. But after that new all-time high, the profit taking took the price into 15K. If that changes, if suddenly we start seeing more spot, you will learn it in this channel for sure. Now, the open interest from the point of view of scalping, 4 hour, just short term, we can see that it's reaching the top of the band with 117, 118. Once we cross the horizontal blue line, 99% of the time we get a local top that needs a pullback before heading in any direction after that. So looking for longs in here with this already at the top of the band can still give you reward, but at a very high risk compared to entering in areas where the open interest is resetting. Both long-term holders and large holders are still in area of accumulation. Long-term holders took a little bit of a dip in here and just sideways, but there's still not anything close to a heavy distribution, neither from the large holders. We are at 74 in the grid. We have a warning cell that we identify during the week with a golden cell overlapping, similar to what we have in here. I'm gonna show you one that failed just so you are aware as well. This one in here in October 2023 was an overlapping gold and warning sell, and we carry on going up. But after that, this warning sell with golden sell played out, because from 73 we went into 49. This one in here, the golden sell print at around 90, and we went into 110, so still went up, but then came back down to 74. So I will say play out. Remember, the interpretation I give this signal during a bull market is to watch out and look out for exits. You can keep holding your long, you can keep riding up, price might continue pushing higher, 20k more, but you know that you are in an area where local tops or tops are formed. Short-term liquidity is almost all gone. We have to get up until 120, and that's it from short-term liquidity. Typically, you get swings, right? You hit all the longs and then all the shorts, even in the short term, in small swings. In long term, we have this view. We have the 1, 2, 3 buckets that we formed out of the breakout of 2024. This was looking in big red at that time. Then we have the bucket 2, also big red, and 3 was slightly less. I was speculating that we were gonna get into 2, but we went into 3, and not just that, we carry on even higher into 107, and we form a top formation around here. So we did 1, 2, 3, and a 4. So if we were to do something like that, we have 1, 2, 3, and a 4 that reaches 150. But I'm not counting and investing heavy, thinking that we must get to 150. I'm gonna take it as one step at a time, particularly thinking about my spot holding positions. For the short, I need to survive something like this. My short, I didn't open it in here thinking, yeah, we're going to 150. Of course, I opened it thinking we're gonna hit some levels that are very juicy in this area. But if I'm wrong, I got plenty of juice to survive all of this. Not to mention that I still hold spot. That definitely puts me in a lot of control as we go up together with the short. I think we have a good chance to make this play out in the remaining part of the year, particularly by the end of the year. But I doubt that we are gonna approach January, let's say, just into a straight line into 150 and 160. I feel like August is gonna be a stone in the way where we are gonna get a pullback, some sort of disappointment, and then carry on to the upside. But of course, I'm not a crystal ball reader. I have no damn clue what's gonna happen. I'm just trying to control and manage my risk and make money out of this without knowing at all what's gonna happen. We took all the liquidity in here, and if we focus on the 1 year, the next liquidity that is big is 83k, followed by 124 now. And on the 30-day, we got big buckets at 106, 110, and 114. I'm hoping that we go beyond 114 into here so I can take some profits, but if not, I'm gonna have to add higher. We got a huge liquidation that we've been anticipating throughout this whole period. This went beyond 1 billion of shorts liquidated, which could indicate that there's still more shorts. Remember that shorts getting liquidated have like seasons of shorts liquidated and then seasons of longs liquidated. So maybe one more leg or 2 more legs of shorts liquidated, and then we flip to liquidate longs. But don't get it wrong, longs will get love as well. Market maker spread kisses and hugs across all the population. And this is the wall that we are seeing now. It's a wall of 100 million located at 120. We need to watch out for this. Everybody's cooling down over the weekend, so don't expect here to see any big participant getting interested in longs. It's rare that we see something like that in a weekend. It can happen, but it's very rare. That those same levels are located in here at 120 on trading light. We got some support coming in at 117 and 116. Below, there is not much more. All the levels below 110 have been removed or reduced significantly. All the action is going on in here, and if we go to Bookmap, we can see the same picture, right? Now we are talking. We see Bookmap heavy on very constrained kind of range over the weekend. Very interesting level, this 120 that now has 576, which is more than what we have close to the price. That is also interesting. You can see that there is heavy resistance as we approach 120. Support, yes, definitely there is, but I will say that there is more resistance at close proximity. Continuing with Market Monkey Terminal, we can look into Binance, order book 683 at 120 with maybe there is a bit more if we aggregate all the support, sure, but if we aggregate all of this, there is also very significant on Bybit, very close to the price, on Coinbase at 120, and on OKX at 119. CBD, which is aggressive buyers, peak when we got in here, but then they went just sideways. So they got their nonsense crazy buying with market orders, and now it's just flat. Net longs flat, net shorts flat after having taken a big hit. Open interest got a hit, but we came back to 88k. Longs are still very little at 31. Funding raise slightly in the positive, actually well in the positive. And remember that these red bands in here of longs being very small tend to be local tops. This time at 112, 113 didn't play out, as you can see. But the previous times, the red bands have been local tops, local top, and local top as well. We are still in a red band, so maybe the local top is this 118. I don't know. I didn't notice, but yesterday we were in extreme greed at 79. So you know what we should be doing? You should go to your mirror, get yourself 2 coffee cups with espresso, drink it, down it, and then slap yourself 3 times. If you're considering to enter big longs in here and you don't have already a long from lower prices that at least you can average up to protect your risk, if you are really entering naked with your first long in here, yes, you can make profits, absolutely, but at a very high price of risk. You can see the shift in here when we focus on the bid versus ask screener. It could be just the weekend, but as you can see, this support, this shiny yellow in there, that means that across multiple deviations of 1, 2, 5, 10% away from the price, it was dominated by limit orders below the price holding it. But over the weekend, that has significantly now shifted into percentiles of 52, 31, 46, 57. So that is a sharp decline from 100 percentile, which was definitely the biggest support that we have, and now we have kind of half of that. So that could be just the weekend, but you know, if it continues the trend of pulling out the support and turning it into resistance, that could end up turning into a local top. Particularly if we head into Monday and the picture remains like that, or if it increases the amount of resistance even bigger. There's been some developments in terms of geopolitical tensions, which I'm not gonna cover in this already extremely shadow banned channel. No one is getting notifications, videos are not appearing in the timeline, so I'm gonna push back myself from talking about the reality. But yeah, there are some potential escalations of things, the chats about the tariffs as well that are not necessarily going to help. That has already pushed a little bit general markets, not the same with crypto. So we had an S&P closing like this in the red. Is not a big massive sell-off. Recently we put all-time highs, so things are still looking pretty bullish, but we'll cover that when we get into general markets. We're gonna cover a little bit of altcoin charts as well. We're gonna cover dominance and how I see this progression into a potential altcoin season. If you want to stay up to date with all my charts, and I'm talking not just about Bitcoin in general markets, but also charts to do with altcoins. If you don't want to get an actual subscription to TradingView and have to pay for that, if you are on the move and you have on your phone Telegram, you can always access my Telegram channel that always has a link to TTP charts. You click on that and you're gonna interact with a bot that allows you to see all my annotations on my charts. It is for free. You can get up to 2 charts a day. Of course, it's expensive to run this crap. If you want to support it and support the channel and my team, so this video can have someone editing it and writing a summary that goes into my Patreon members as well, consider getting a subscription to get access to the charts and to see all my lines updated in real time. For example, in here, I'm going to click on BTC 4 hour, and then I just wait a few seconds and I get an up-to-date chart with even the lines that I just moved while I was recording the video. You can get 3, 6, and 12 months directly from my Patreon shop, which is patreon.com/thetradingparrot, and then you click shop and you're gonna find options for different subscriptions. All right, let's go and let's look at the altcoins. You can see that we are doing our third attempt to exit the Bitcoin season. We did it in March 2025, we did it in May 2025, and now we're doing it in July. It seems like every month we want to get out of here and then we fall back into Bitcoin season. That means that Bitcoin is overperforming everything else. What am I saying? So it's at the top of the range now with 34% of performance, overperforming all these losers on the right hand side. You can see all the coins that are underperforming currently Bitcoin. And to get an altcoin season, we need Bitcoin to sit lower in this ranking so that the season index of the past 90 days can climb into even 80 or 90%. And for that, we've been monitoring this particular chart. This is one of them that we are monitoring. We're going to look into Bitcoin dominance as well, Ethereum dominance, and all of that. But this is critical, guys. We say we need to stay within this channel to have a chance for the altcoins to do any good. Of course, if we exit the channel like we did in 2021 and we break out to the upside, all the cash goes into stable coins, and that's literally a capitulation into bear market. So exiting from here is bad, staying in the channel is good. And we got rejected from the top of the line. So that was saved by the bell, and we put a double top, which is also promising. Imagine this comes back down, let's say into 16%, that will give still additional room for the altcoins to do well. Now, if this bounces back up and breaks out beyond 27%, any close above this will be definitely scary. Now, on the Bitcoin dominance, we seem to be doing pretty well. We had a breakdown from the top of the range. I expected this to top at around 66%. That came from the RSI 7181. If you missed the video, that is because of the RSI hitting the top of the range and then breaking down from here. That's breakdown number 1. Breakdown layer 2 is this one. Now we are taking the lows of 60 and we could be heading into 47. That could bring the dominance into just 60. At that point, we are hitting support. Of course, there is a support around here. We break down that and we enter into a heavy altcoin season. Of course, an altcoin season, you don't wait for the altcoin season. You don't invest during altcoin season. That's where retail enters. You need to think like a market maker. You need to time the ugly times where everybody's suffering and saying that altcoin season will never come, and you invest there at the very highs of the Bitcoin dominance, and you're already invested now thinking, well, this is looking promising. I might as well hold a little bit longer. If we get into 60 and we bounce back up and we see strength that we are going to put another high, maybe I get out with some profits at least. I think that there is now a good chance that the Bitcoin dominance is going to come back down into the next support of 46 and maybe hit 60% very soon. But there are a few things that I need to make you aware. We've been monitoring this fractal in here. Notice the two eyes and the mouth. That is from 2021. I just translate the fractal in green here, and we've been following perfectly this. I noticed it around September 2024. We are well beyond 300 days, almost getting into a year, and we continue to monitor to mimic this bastard. Look, we went high in here to 5%. That was the area where dominance is putting high. That's where you have to invest. And now we are reaching the lows. That's where you have to take some profits. We are at 4%. And if we continue to mimic this fractal at 422, this bastard is going to start rallying into 645%. That means that everything goes back into USDT and you're being rug pulled. So watch out when we get into 4%. And don't take decisions until you get the next charts, because there is another chart that says that there's still room to go beyond. Why is that? Because this chart monitors only USDT. I've been monitoring this chart for years, but now we have USDC as well in the game. And when we bring USDC together and we do an aggregated stable coins dominance, we're going to see a different picture that's a little bit more optimistic than getting into just 44%, and that's it. Today, I'm not going to cover the ratios. Watch my video from Friday, because that contains precisely all the insights that you need to be aware, particularly these breakouts that are calling for a rally that could potentially go way beyond the levels that we discussed earlier in the year. So if you've been away from the channel for a while, do not miss the ratios. Okay, let's go back to dominance charts and altcoins and all of that. So far, total 3 is looking healthy. You can see that we broke out, we got into a high of 55, we put a higher low at 45, and we continue in this trajectory that could end earlier if we get into 72. That could be it, or we could hit the top of the range at 90 and then say, well, that was the actual top of the altcoins. After all, we are very far from the highs of momentum of 94 in the previous cycle that was in February 2021. Notice that the top of the momentum is not the top of the price. So once we reach 70, if that's the top of the momentum, price could still put new highs. So far, I'm seeing this as a positive sign that we should maybe get now a pullback, maybe in end of July or August, but still we should continue to the upside with the momentum. Think about it, something like this, healthy pullback, and then continuation into 70, into this area here. Now, let's look at the Ethereum dominance. And this looks very interesting and a little bit unsettling as well, okay? Because Ethereum has underperformed and it's been a piece of crap, but now is potentially on a way back, right? So we are at very low levels of dominance in Ethereum, just at 9%. We hit 7, that was the lowest, and it was almost as low as this level in here. I'm just noticing that it overlaps with the double bottom in August 2019. So what is my worry in here? Well, before talking about my worry, let's say the bull case. The bull case is that the Ethereum dominance does this and we go into a rally that is phenomenal. That is more or less what we did in December 2019 and we started rally. My worry is that we get a rejection, of course, and then we get a higher low and we do it from lower. If we do that, of course, Ethereum is going to suffer, it's going to have a little bit of a shakeout. But we need to monitor this, and I think there is still a chance that we break out in this area that is supported by the fact that total 3 and end of the year, Bitcoin being healthy and all of that. Now, my favorite chart of the show today. This is all stable coins dominance full history. Really crazy chart. And I'm trying to identify corresponding channels in the momentum with where we are now in the cycle. Remember that we came from this chart, right? We had that support that got broken. That was awkward. Why we went so low there? Why are we again below the trend line? Is this going to play out? And all of those questions I have in my mind. And I decide to step back from USDT dominance and upgrade into stablecoin dominance. And let's see where we are really. Let's start with the actual price. Let's magnify this. And you can see that support was on the 2nd of December 2024. Okay, that is the same support as March 2021, the same support in here as February. These are areas where if you don't take profits, you're pretty much an idiot, right? Because this is the highest risk in the market. That is that everybody is already fully invested and they're about to rug pull into USD dominance and stable coins pump and there is a crash, right? So where are we here? We are at 7. There is room to go lower to 6%. So 1% additional that can go invested into everything. If we want the altcoin season to go mental, that is either gonna get in here and creep up in a sustained way for a few months of altcoin season and then push up. How does it look a bear market? A bear market looks like this. Just like this went from 2 to 23, this could go from 6 to 25. Rare, but doable is we break down in here and we have a way bigger altcoin season. So why is promising this chart? Because it allows for some room for the stable coin dominance to reduce a bit more and to allow expansion still of all coins and everything that is an actual coin invested and it's not stable coin. It seems that the best areas to invest during the cycle is when the stable coin dominance reaches tops of 9 and 10% in here. That is within this momentum channel. Every time that you reach a new peak in here, there is blood in the streets and you invest and you come back down and you reduce. Similar way of investing in this channel up on the stable coins in the previous cycle. Notice the last time you can invest is this. In June, there is some positive moves down, but you need to adjust where to exit. Otherwise, it pushes even higher because you are in a bear market. All right, let's wrap up the altcoin season, Bitcoin for this week and everything. Last weekend, we were talking about all the things that were looking bearish and bullish in the Sunday Alpha, but I say that despite all of the bearish things, we are sitting underneath the biggest pool of liquidation, and we didn't liquidate anybody for very long, and I started feeling suspicious that we were going to still hit the liquidity pools and armrest with all my arguments that we are breaking down on the 4-hour, 15-minute, daily, whatever, and all of those signals were going to be just invalidated, and we ended up taking all that liquidity. Today, we are on a Sunday, and we ran out of this liquidity. Bitcoin has consumed all one. So in order to carry on going into number 2, which is now considerably less big than number 1, we got a good chance that we go into 2, okay? We are in a bull flag and all of that, but we have some arguments to break that as well. We have a selling wall of 100 million currently holding the price. Of course, that can go by the end of Sunday and change with Monday open. But so far, I'm a little bit suspicious of whether we are going to make it straight into 2 with just a line. If we do that, probably we're going to do it with Sunday at midnight. Bitcoin tends to start rallying at 11 p.m. If we do it then. And we go into number 2. If something could affect general markets and there is some fears going on around escalations, tariffs, a couple of countries taking it wrong, and decent geopolitical escalations, then we immediately remove 2 and we prepare for a red open on Monday for general markets, and that could put the local top, that could bring the price to test those levels of support that we discussed. And in terms of altcoin season, I still think that there is some room to go to the upside, but remember, we are in an environment where retail is completely rug pull, or they have a preference to go into things via ETF. There is a lot of cash going into Ethereum, but it's going via ETF. Is that liquid enough to support a heavy, sustained, massive, mind-blowing altcoin season? I have my doubts, because in previous cycles that went through Ethereum, it was sitting in a wallet on the blockchain by retail, and people were flipping coins and doing things. If it goes into an ETF, can they really do the same thing? Do you think they're gonna extract it from the ETF and suddenly flip it into Solana or a meme coin so it can pump? Maybe not as easy as before. Are they printing money? Yes. Federal Reserve is adding, yeah, sure, more money. But I tend to see that that's going into the ETFs a lot more, and that retail is not as invested as before. So I'm ready to be slightly disappointed with the shape. I don't want my experience in 2021 keep the expectations so high as most of the influencers are giving you. If we are wrong, well, I still hold Ethereum and ADA, and I will be more than pleased with my other bags to get them pumped in the next few months. But I'm not gonna count on it without putting a stop loss defending my gains. Alright guys, I hope you enjoyed this video. If you are still watching this, it's because you're part of the Parrot army. You're not part of the chimpanzee group, and you deserve a hack from the Parrot, and I deserve a like and a comment down below. Go and do that. That will really help the channel, being totally honest. I'll see you on the next one. Bye bye.